Hey friends, happy Friday to you and your loved ones. Hope you had a great week, and a weekend ahead is going to be a blessing to you. So I wanted to give you an update this week. Obviously, we had the CPI report that came out Wednesday as expected. It did come out a little bit better than the market expected. Certainly not as good as some of us would have hoped, but as we've said in previous videos and conversations, that this was going to be the beginning of a good summer. So certainly we didn't expect rates to drop all at once, and it's not going to be a straight line either. In fact, in today's trading, we saw that we gave back a lot of the gains that we got in the mortgage-backed securities on Wednesday. But to recap, from last Friday to this Friday, we are basically pretty flat from where we were last week. Now, Monday and Tuesday, rates rose a little bit from Friday, and then Wednesday with the CPI and inflation numbers looking really good, and the forecast looking even better, rates dropped significantly on Wednesday. They continued to drop on Thursday, and they were about flat this morning, but at the time that I'm providing this video and you're updating the text message, unfortunately, they gave it all back and rates went up pretty significantly today. There's a key indicator when you look at both the mortgage-backed security charts and the 10-year Treasury charts, and we have been really battling the 200-day moving average. So if you were to look at any charts right now, both the mortgage-backed securities and the 10-year Treasury, you're going to see that every time we bump across it or we get across it, we might live there a day or two, and then it seems like the traders just, they're taking gains and they're just, we're right back where we were. But it continues every time we cross the 200-day moving average. It seems like we live there a little bit longer each time, which I think is a good thing when you take in consideration the fundamentals that are behind us. I really feel like rates are going to be hot this summer. We do definitely feel like that is going to happen. So I can't tell you exactly when, I can't tell you exactly what, but a lot of the experts are saying that rates might get into the mid, possibly the low fives by the end of the summer. So stay tuned. I think June, July, and August specifically, we're going to see a run down on 30-year and 15-year fixed rate mortgages. So something else I wanted to talk to you guys about, besides just the markets, is self-employed borrowers. We all know them. We all come across clients that are self-employed, and oftentimes because of their tax returns and because of the net income versus the gross income, remember, self-employed borrowers are qualified based on net income. So many times I have gotten so many applicants that say, look, I made $150,000 last year, but what they're really talking about is revenue or gross receipts, and they're 1099. But then they wrote off $100,000 of expenses, so the underwriter is going to look at that as only $50,000 of income. So if you got people that are self-employed, have them talk to us or a mortgage specialist about bank statement loans. They're a non-conforming product. They don't look at their tax returns. They don't look at P&L, they just look at their bank statements, and they determine an expense factor based on the deposits month over month over month. Sometimes we look at 12 months, sometimes we look at 24 months. You can lend all the way up to 90% loan to value as long as you have a credit score above 700 with certain investors. With a 15% down payment, I've got some investors that'll go all the way down to 660 credit score, but certainly a viable option for self-employed borrowers. So if you have anybody that you know that owns a business, or someone says, hey, I'm looking for a house, I'm not so sure, I don't have my tax return put together right just yet, there are options even if you don't have a W-2 and even if you don't have a tax return. And believe it or not, we have options for people who don't even have a credit score. So essentially, because the market is beginning to improve, more and more people are going to begin to look at houses more so than last year. And so regardless of their situation, if they have a credit score, if they're a first-time home buyer, if they own a business, regardless, let them talk to us so that we can consult with them and walk through more options than we probably have ever seen before. There is an option for almost every buyer in this market. Let us talk to them. Let us help get you contracts so that you can get your clients into homes. You guys have a great weekend. We'll talk to you next week.